एक सवाल जो आजकल काफी लोग पूछते हैं मार्केट का क्या होगा। विथ ऑल योर प्रेजेंस आई कैन अश्योर यू दैट मार्केट का बॉटम नहीं हुआ है। इफ दिस हॉल वाज हाफ एम्प्टी आई वुड हैव श्योरली सेड दैट मार्केट का बॉटम बन गया। बट इफ ऑल ऑफ यू आर प्रेजेंट ऑन संडे मॉर्निंग तो मार्केट का बॉटम तो नहीं हुआ है। एनीवे, इन द शॉर्ट टर्म मार्केट्स आर लाइक वोटिंग मशीन, जिसको जितने वोट मिले वो जीतता है। बट इन द लॉन्ग टर्म मार्केट इज लाइक वेइंग मशीन, जितना वेट होगा उतना ही दिखेगा। So let's look at first the fundamentals and then the flows to determine where the markets will go. If we look at our economy over last decade, it has done well. From about 9% fiscal deficit to GDP, next year's target is 4.4%. Thoda bahut idhar udhar, but we should be able to achieve it. India is the only major economy in the world which has reduced its debt to GDP ratio from subprime crisis to COVID crisis. No other country, no other major economy has done it. Banking NPS to reasonably clean balance sheet except on microfinance is a fantastic achievement. And the proof of pudding is when SVB, the 16th largest American bank, was going down, a small bank in Mumbai, Shamrao Vittal Bank, had to announce that SVB matlab wo डूब रहा है, हम नहीं. Please don't stand in front of us. Go and line up against American bank. Inflation from double digit to mid single digit, and hopefully we should be able to get low single digit over the next couple of years. After paying $70-80 billion, we are still top 5 FX holder in the world. It shows that on external side, this time we are reasonably safe. Infrastructure deficiency to availability, as we have doubled infrastructure in last 10 years. More importantly, mindset has become tentative to confidence. And if you want a proof of this, I'll recommend you to follow Sabir Bhatia's handle. बेचारे ने गलती से कह दिया कि स्टैनफोर्ड इज बेटर एंड IIT बकवास है। लोगों ने उसको ऐसा धोया है कि पूछो मत। So do go and see the reply to Sabir Bhatia's tweet. It's a fantastic tweet of how Indians have become confident. From fragile 5 to fastest growing major economy in a decade, not a bad achievement. Of course, we have a long, long way to go. We are still a poor developing nation, and hence our journey has to continue at much faster pace. So the wedding season hopefully should also put some money in the spending power. The government, after playing like Rahul Dravid in the first half, is playing like Virendra Sehwag in the second half. The spending is picking up. And more importantly, raincoat has been kind, so Kharif and Rabi crop both will be bumper. This should push growth above 6.5% to 7% range in the days to come. We have been also blessed by lower crude prices thanks to President Trump's drill baby drill. The oil prices are now hovering around 70, giving us stability on balance of payment. One thing which is negative for India is the FDI that has turned virtually flat. The gross FDI is still good, but we allow companies like Hyundai's and LG's and Whirlpool to take money out. How do we learn from China through Sam Dam Dand Bhed कि एक बार जो अंदर आए वो बाहर नहीं निकल पाए? We have been tracking GST collection. And clearly, trend last year has been fairly uneven. Sometimes it is growing better than nominal GDP, sometimes below nominal GDP. And now the nominal GDP itself has been revised downwards. So overall, we are moving in right direction, but the speed has not been picked. This is one of the global research forecast about India. 60% chance you will do well. 40% chance there is a risk. we think we will be somewhere around 10% GDP growth and about 5% inflation. The real challenge for India is that we are not taking tough decisions. It's a 240-seat coalition government, and which is why some decisions are possible, some are not. Few things like Uniform Civil Code, Population Control Bill, if they don't get implemented, they would impact growth. Few things in a coalition government also will continue, like infra investment, focus on renewable energy. This year we added 25 gigawatt of renewable energy. Digitization continues at good pace. Thanks to three neighbors, the focus on defense and R&D is increasing. Employment, skilling, housing, government continues to do something and private sector continues to support it. Property rights under Swamitwa scheme is ensuring that people in semi-urban rural India will come and become part of organized sector of financing. More importantly, we are also pursuing path of fiscal prudence. This is good enough to give us 5, 6, 7% growth. Good monsoon, good global economy will be growing at 7%. Bad monsoon, bad global economy will grow at 5%. Some things we are doing in 2-step forward, 1-step backward manner. Asset monetization. The government announces that government is no business to be in business, but फिर बेचने में दम निकलता है. Free trade agreements, we are negotiating. It takes a lot of time, and finally we don't know how to leverage it. And most importantly, ease of doing business. In post-budget meet in Mumbai, Finance Minister announced that they have removed about 1,500 laws, 40,000 compliances. That's a step in the right direction, but we still have a long way to go. There's a law which says that if you don't keep your canteen cook's health record for 3 years, you could be put behind the bar for 3 years. Now, मैंने ECG रखा तो बोलेंगे स्ट्रेस टेस्ट किधर है? स्ट्रेस टेस्ट रखा तो बोलेंगे 2D एको कहाँ पे है? 2D एको रखा तो बोलेंगे CT स्कैन कहाँ पे है? और CT स्कैन करवा लिया तो बोलेंगे ECG कहाँ पे है? Everything is under the interpretation of inspector. We are improving ease of doing business, but we need to improve it substantially. We need to unburden our entrepreneur. If we can do that, growth rate can go to 7, 8, 9%. Your guess is as good as mine as to whether we will do it or not. In crisis time, we'll move 3 steps forward. But in a good time, it is 2 steps forward and 1 step backward. Being democracy, being coalition government, few things we are unable to do. Land reform, impossible. Labor reform, unlikely. Farm reforms, कोई chance नहीं है. तारीख पे तारीख चलती रहेगी. A strategic divestment like Air India looks very difficult now. Pension reforms, every government employee wants defined benefit, committed pension linked to inflation. These reforms are unlikely to happen. But if we are lucky and we get that kind of leadership, this can push India's growth to double digit. Our feeling is that we'll continue to grow at 5, 6, 7%. It will still keep India as the fastest growing major economy. But unlikely that we'll be able to take tough decisions which can push it to 10, 12% GDP growth. But then India can always surprise. We conducted Mahakumbh quite nicely. No other country could have thought about it. India can also surprise, and this is based on PM's speech at GBS 25. Tarikh pe tarikh may become tarikh. Under the Bharatiya Nyaya Sanhita, some of the judicial process has been improvised significantly, and from FIR to verdict is happening at a much faster pace. Are there exceptions? Are there rules? We'll have to see. ability of India to focus on problems and resolve is also amazing. And that's witnessed in aspirational district to inspirational district. By putting young IAS officers who have just joined IAS and putting them into this kind of really backward districts, they have been able to do a magnificent job. From below national average, now these districts have averages which is comparable to global standard. So maybe we'll be able to take those tough decisions, which I believe is not happening right now. But then we can also surprise on the negative side. Right now, winning election is all about promising Ladli Behna, Ladla Bhaiya, Ladla Beta, Ladli Beti scheme. Whenever money is spent on Ladli Behna, the multiplier effect on economy is about 0.9x. Whenever money is spent on infrastructure, multiplier effect is 3x. The government does not have unlimited money. And hence, whatever is spent on Ladli Behna, Ladla Bhai is coming at the cost of infrastructure. Fortunately, central government has cut the subsidies, state government has increased subsidies. As a country, we are still in stable regime. But more and more state elections are on the way, not in the next 15 months except Bihar, but after that. And then what will happen? The other challenge for India will be technology. We recently met CTO of a European telecom company who employs about 12,000 people in BPO in India. In their opinion, over the next 3 years, there will be zero employee in India. Everything will shift to chatbots and AI-driven solutions. There are about 80 lakh Indians working in BPO business directly or indirectly. चलो 3 साल नहीं 5 साल में अगर ये zero हो गए तो how will we manage? AI starts sitting coding and programming, we are in serious trouble. The third is GCC, that also employs about 60 lakh Indians, giving contribution of about 40 to 50 billion dollars. Will this also come at a risk with rapid advancement in technology? So we are moving in right direction. The speed is much slower than needed, and there are some formidable challenges. How do we convert this into the market? Let's first find out where the market is unlikely to go. One, this is more of a sectoral correction. The Nifty 50 and Nifty Midcap 50 haven't corrected in bear market yet. But some of the sectors like media, energy, real estate, public sector enterprises, they have been significantly impacted. We think on a fundamental basis, downside of the market is limited. In 2020, listed corporate India's profit was about 4 lakh crore. Next year, it is likely to be about 18 lakh crore. Stocks are slave of earning power. As long as this 18 lakh crore is not coming down, the downside of the market is limited. Valuation wise, now large caps are at a discount to historical average valuation. Mid and small cap are at marginal premium, but that premium can be justified based on the earnings growth. Despite economy slowing down, the Nifty 50 EPS is still reasonable. Last year it was 950 rupees average. In first 3 quarters, the run rate is about 250 rupees. This March, we should go to about 275. Overall, 1030, 1050 Nifty EPS looks fine, achievable. And next year will be about 1172. So earnings growth is still decent, and hence downside of the market is limited. So based on earnings, based on valuation, based on fundamentals, downside of the market is limited. But FIIs are selling, and they are selling aggressively. Why are FPIs selling so much? One, it's ghar wapsi to America. Recently, SoftBank CEO was meeting President Trump, and his starting statement was, "Sir, you wanted me to invest $100 billion in US. I have come with a proposal to invest $500 billion. अब वहां पे 500 बिलियन डालेंगे तो यहाँ पे पेटीएम बेचना पड़ेगा." There is vacuum cleaner in US which is on right now, and it is sucking liquidity and capital from all over the world. Second, emerging market over developed market has been underperformer over last 5, 10, 15, 20 years. Emerging market is like 1980s Indian cricket team. सुनील गावस्कर बैटिंग करने जाते थे और जब वो वापस आ जाए बाकी सब लोग घर पे आ जाते थे. In emerging market, India is the only country which has delivered return comparable to developed world. Rest all the biggest, China, Russia, South Africa, Brazil, Turkey, haven't delivered any return. And which is why now global investors are asking, should I be investing in emerging market? Am I not better off staying in America or developed world? This is not quit India movement. This is quit emerging market movement. And across emerging market, there has been massive selling by FPIs. Some people claim money is going into China. Well, they must have hotline to Mr. Xi Jinping, because since October 24, they are not disclosing that number. अब पैसा आ रहा होगा तो डिस्क्लोज करेगा, नहीं आएगा तभी डिस्क्लोज नहीं करेगा. So anyone who claims that China is receiving money, FPIs are selling India to get into China, they must have a hotline with Xi Jinping. If FPIs are selling so aggressively, should we join the bandwagon? हम भी उनके साथ बेचने लगे? As a fund manager, my answer has to be no, but I'll also give you logic why answer is no. One, it's not that FPIs have quit India en masse. What they've sold is fairly small percentage of their holding. A substantially large portion is still kept in India. Second, it's not that FPIs are selling everything. They have sold large cap. They have sold little bit of mid cap. But in small cap, they have actually added in October to December 24. So they are also selective. Within FPIs, long only FPIs, insurance companies, pension companies, and index funds have sold. But sovereign wealth fund and university endowment fund have been buyer in last quarter. So there are different FPIs playing different games. Right now there is selling. It's more kind of profit booking than quit India. The holdings of FPI versus benchmark index is now at one of the widest spread. Our benchmark weight is about 19%. FPIs are now at about 16%. With such kind of underweight position, to keep on selling India might be a little bit difficult. US now has about 65% share in global market cap, and their GDP share is 26%. This is the highest ever representation of US in global market cap relative to their share in global GDP. And जिस तरह से ट्रम्प साहब सबको हिला रहे हैं, your guess could be as good as mine whether this will increase or this will start flattening out. In case of India, this is first time in last 10 years that our share in global market cap has come down below our GDP share. Normally, we used to trade at a premium. We were punching above our weight. Now, we are having lower market cap share than the GDP share. Emerging market, developed market, as I explained, last 10 years have been in favor of developed market. But they are like saas bahu, kabhi saas upar, kabhi bahu upar. So between 89 to 94, emerging markets outperform 95 to 98 US. 99 2010 was home run for emerging market. And 2011 onwards, developed market won. Today, compared to developed market, emerging markets are cheapest. Quite likely that things can turn around over here. If that happens, quit emerging market may become invest emerging market. Money could go to China and some money will flow to India. As FPI, if you had a choice of investing, where will you go and invest? Chinese market had a dream run. It's up about 38% from bottom. Yet it is trading where it was trading 17 years before. 17 साल से चाइना में किसी ने कोई पैसा नहीं बनाया है. We are still trading at Feb 24 level, about 12 months behind. In last decade, Chinese EPS growth is about 36% in renminbi terms. The economy has expanded, profits have expanded, but EPS hasn't expanded because China is not good on capital allocation efficiency. In the same time, US and India, in dollar and rupee terms, has expanded at a much faster pace. Last 10 years were best for China. Next 10 years, as per their own admission, growth rate is slowing down. India, last 10 years were good. Hopefully, next 10 years will maintain the same pace or better it. And hence, if you are a global investor, quite likely that you will be more focused on investing in growth market rather than a non-growth market. Now, please don't underestimate China. They are a miracle economy. And while all of us were focused on how Chinese real estate is crashing, how they have created ghost city, how Chinese citizens are over-leveraged into real estate, they have created the biggest miracle by increasing their industrial capacity. In automobiles, we have seen how China is decimating virtually everyone. Across industry, they have gone ahead in investing. Even on semiconductor chips, there's only one company, AMS in Netherlands, which makes machine for making semiconductor chips. As we speak today, China has announced they have created alternative way of producing chips, and their technology is superior to what AMS is producing. China could still act as a magnet for attracting flows from developed world. And we should be happy about it, because if emerging market where China is about 35-40% gets money, हमें भी कुछ ना कुछ पैसा तो मिल जाएगा. Domestic investors also have money between cash balance, allocation in balance advantage fund, SIP flows. We can absorb enough supply from FPIs. Obviously, if they are aggressively selling, we are not going to give easy exit. नीचे कर करके ही लेंगे. जब तक बेचेंगे मार्केट गिरेगा. जिस दिन बेचना बंद करेंगे मार्केट की बॉटम बनेगी, और जब खरीदने आएंगे तो मार्केट भागेगा. In this market, where you should be very cautious despite this correction, one is SME IPO index. Over last 10 years, this index has delivered 4,000% dollar return. It is more than the combined return of small companies like Mark Zuckerberg's Meta, Elon Musk's Tesla, Tim Cook's Apple, Sundar Pichai's Google, and poor Jeff Bezos' Amazon. ये सारे नाम यहाँ पे household name है. And yet they have underperformed our SME entrepreneurs. And we don't know even a single Indian. Alok bhai, आपको पता है क्या करते हो Alok bhai? You should know, na? See, this is the problem of Indians. सो ये मार्केट भगवान को मालूम कैसे चल रहा है, क्यों चल रहा है. यहाँ पे there are some good companies. It's not that everything is fraud, but this numbers does not give you confidence. So be very, very selective. We have been very cautious on low floating stocks. There are many companies where floating stock is very, very limited. They have corrected significantly. But despite that correction, their valuation is much higher than their listed peers. यहाँ पे there could be bounce back because floating stock is limited, but ये सब बेचने के भाव है, लेने के नहीं है. These are couple of days back all the stocks which have fallen maximum in NSE 500, and most of the mutual funds, including us, will have very few presence over here 1 year back. In our today's portfolio, there may be some name because now they have fallen and we find it attractive. But most of us avoided them investing a year back. This is still the market where you go for quality over momentum, high floating stock over low floating stock or concentrated holdings, and reasonable valuation over expensive valuation. Despite massive correction, there are 150 stocks as of February 28 which are trading above 50p. There were just 79 stocks 5 years back. While investing, while we believe downside is limited, upside is also limited. Last 5 years, broad market return was about 14%, driven by small and mid cap at about 20% plus or minus. But 15 years before, market return was just about 11%, driven by large and mid cap at about 11%. 20-year return for broad market is about 12%, with not much to choose between large, mid and small. Sab average ho jate hain. Going forward, we still believe equity will be a better performing asset class, but unlikely that it will deliver last 5 years return. More likely that it will deliver return somewhere around its 20-year average. You'll have to moderate your return expectation while investing in the market, even though downside is limited. At this point of time, we think large caps trading below historical leverage provides good opportunity. Small and mid cap, there may be some more pain. Correction is a great opportunity to add large cap, but in a calibrated manner. Do remember, FPIs are selling, and if they are selling, we will continue to buy at lower and lower prices. In the short term, flows will drive the prices. Over longer term, fundamentals will drive the prices. This is the most important chart to remember. Price is what you pay and value is what you get. There are exceptional bargain period where P ratio is high single digit, low double digit. Obviously, your return can go to 15-20% compounded. There are times when P ratios are high, the returns then come down. As of today, we are somewhere in the middle, and hence moderating return expectation is necessary. On the fixed income side, rates will be cut, liquidity is being enhanced. This is time to go and lock longest possible duration. We are unlikely to see this coupon, this yield over next 12 to 18 months. There is also another market called performing credit AIF. Most promoters, when they want to borrow money for corporate restructuring, acquisition, they can't go to banks, mutual funds, NBFCs, insurance. They have to go to AIF, and there are now more borrowers and very few lenders. Deals are becoming attractive, rates are becoming good, and compared to what kind of return is possible in equity, performing credit AIF provides better opportunity. So do have a look at performing credit. On gold, there is competition between Indian housewives and central banks around the world. They have started buying like our housewives, and they have also started behaving like our housewives. एक बार खरीदा फिर बेचना नहीं. The Western world is overbought on gold. 50, 60, 70, 80% of their FX reserves are in gold. The eastern part had least exposure to gold. India, 10% of FX reserves are gold. China, it's about 5%. There's no price for guessing where the direction will move. So overall, gold prices should remain supportive. There is a short squeeze going on, so there will be some amount of corrections once the short squeeze is over. But overall, gold prices should continue to move higher. China has allowed their insurance companies to buy gold. $4.3 trillion is AUM of Chinese insurance companies. As of today, 1% of their AUM they can invest in gold. That's $43 billion buying. आज एक है, कल दो होगा, परसों तीन होगा, who knows? That being the case, we remain bullish on gold. Gold prices also get supported whenever US interest rate starts coming down. With President Trump, it's difficult to predict, but you can still take a guess कि आज नहीं तो कल Fed will cut rates, and that should support gold prices even more. Should we put everything in gold if we are so bullish? Let's not make that mistake. Lab-grown diamond came and real diamond prices disappeared. So gold is a commodity. बहुत ऊपर चला गया तो who knows, lab-grown gold will come. Chemically, it's a very difficult thing to do, but I have put a Google alert on lab-grown gold. I hope to stay ahead of the market on that, and that's why we don't recommend put everything in gold. What to expect in calendar year 25? Global growth will continue to slow down. It was slowing down otherwise. With President Trump, the deceleration is accelerating. There will be rate cuts in second half of FY25 and CY25. In the debt, long duration should outperform over 12 to 18 months. Do look at performing credit AIFs from a carry point of view. Gold should shine over medium term. There will be correction because of short squeeze getting over, but central bank buying will ensure that gold prices remain firm. On the equity side, volatility will increase as FPIs are on the selling side. Flows will determine prices in the near term. But most importantly, while downside is limited, return expectations will have to be moderated. Large caps today are trading below historical average valuation, looks good. Rural FMCG, thanks to all the money being poured into rural economy. Consumer discretionary because of 1 lakh crore tax rebate given in the budget. IT, especially mid-cap IT companies which are leveraging AI to deliver better, faster, cheaper solution. Private banks which have lower exposure to microfinance and unsecured loan, they look to outperform the market over next 12 to 18 months. Chemical results have come fairly good. Hopefully they'll bottom out this quarter and one can look to add that sector also. Be very selective in SME and low floating stock counters. वहां पे बहुत सारी चीजें हमारी समझ के बाहर हैं. There are many people who are predicting market में क्या होगा. Sahadev was the last person who could predict future, and he hasn't prescribed anything on Nifty. Our recommendation to customers will be follow your dharma of asset allocation. Pessimist always sounds intelligent, but optimist makes money in the market. More people have lost money waiting for correction than in actual correction. And whenever SIP returns go negative, think about SIP top-up. People have made more money by topping up during Agni Pariksha than by closing their SIP. This is the final slide of my presentation. The left-hand picture was like Indian economy prior to 1990. This is a step well called Bansilal Pet in Hyderabad, Telangana. Prior to 1991, अपनी economy भी ऐसी ही थी.
Just in time.
Yes. And with the help of Government of India, citizens, and the NGOs, the Bansilal Pet today has become a tourist attraction. If government, entrepreneurs, and citizens work together, there's no doubt that in 2047 we can become Viksit Bharat, and investors will be rewarded. So there was one statement that timing the market is difficult and time in the market makes money for you. This is the perfect example. Shahid Afridi has the highest strike rate among test cricketers. But Sachin Tendulkar, who has spent more time on the pitch, has highest run. And Afridi भाई ने 5 सेंचुरी मारी और 5 बार 0 पे आउट हुआ. तेंदुलकर ने 51 सेंचुरी मारी और 14 बारी 0 पे आउट हुआ. So this is the living proof of timing the market versus time in the market. Thank you.